Good morning, ladies and gentlemen. Welcome to the fourth and last session of SteelOrbis Fall 2024 conference and the 91st IREPAS meeting. I hope you have all enjoyed yesterday's sessions, benefited from the presentations, and had fruitful discussions during the IREPAS committee meetings. Today, in this session, we will first be listening to the findings of the IREPAS committees, and then we will be directing the questions that we have collected to the chairman of IREPAS committees. First of all, please allow me to introduce the chairman of the IREPAS committees from my left to right, Mr. Jens Björkman, the chairman of IREPAS Raw Material Suppliers Committee, Mr. Willem Alf, chairman of IREPAS Traders Committee, and Mr. Murat Cebecioğlu, chairman of IREPAS Producers Committee. Of course, he is also the chairman of IREPAS. So let's start with the findings of the IREPAS Raw Material Suppliers Committee. Jens, please.
Good morning. So it was great to meet here in Paris in the fall. From the raw material supplier side, we were in excess of 100 delegates at this meeting. I think probably outside of Istanbul, it's a record attendance, close to it, Murat. But 57 different recyclers or raw material suppliers attended this conference. Just goes to show that it's a important meeting for our industry. And we had a sit-down roundtable yesterday afternoon after the sessions in the morning, and fruitful discussions on topics from all over the world. So I'll try to just summarize what we discussed. Of course, a lot was revolving around the current China policy. In light of Chinese lower economic activity and below expectations, and even since the summer, July 3rd plenum, when it was expected that stimulus activity would, perhaps hope, it was expected that stimulus activity would take care of excess steel production, but it did not materialize. And despite lower steel production in the past few months, exports of semi-finished and finished steel products are on pace to break 2016 record in excess of 100 million tons. We discussed the China-controlled trading outfits who are trading Asian material towards Middle East and Europe, and really depressing the situation for the scrap market, because one can use alternatives to melting your own material, of course. We saw iron ore continue to drop. The spring meeting, we were in Berlin, and during the spring, we saw iron ore prices come down from around $120 to $100, and now we've seen them come down to two-year lows of around $90, where they've been hovering a little bit back and forth. But and of course, also in light of lower steel production in China. And Indian scrap demand has been lower as an effect of alternatives such as Asian material, but also lower iron ore prices, lower coking coal prices. So demand for ferrous scrap imports has been much lower than previous years. Signals from steel industry has perhaps from last year been slightly optimistic towards 2024. And even during the spring of 2024, the outlooks were somewhat optimistic towards the second half of the year. But as we've now entered the second half of the year, that optimism has really been removed in the from the scrap perspective. Previously, it had looked like the demand levels would be quite satisfactory, but now look quite bleak. And this optimism is, in the best case, postponed until 2025. So we keep postponing. And the European market is expecting an influx of steel products from Asia over the coming quarter, mainly in the flat sector, of course, but it's looking like it can be quite problematic. Germany, we discussed, has been slowing down during the year, and it's really the machine that keeps EU rolling, and it's now a little bit under pressure. We had started the year with improving construction and housing sector, which looked good from a raw material perspective, but conditions have been deteriorating, and with slightly political uncertainty and bleak outlook in the automotive sector, it's looking challenging. So recovery in Europe is also postponed. And in the EU and scrap generation has been under pressure, and this is likely a reason why ferrous scrap prices have been fairly stable over the past 6 months. Until just a few months ago, we were at fairly relatively stable levels, and okay, they've come down since then, but it's still fairly okay. The reason being, most likely at least, or one of the factors is that the scrap generation has been lower than last year. In some cases, as much as 20 to 40% in some areas. And yeah, so a factor why prices have remained relatively lofty. The interest rates cuts, which are expected, the Federal Reserve already this Thursday, if ECB last week, is expected to generate better economic activity, but it may take some time. More cuts to come. Turkey, reeling from cheap alternatives flowing in from Asia, postponed ferrous scrap purchases for quite some time during the summer and the fall, which gave some stress to the system, and suppliers were able to lower their prices somewhat, and seems to have found a balance in these 360 to 370 level, 365 to 370 level. And now the inventory seem to be on the low side, and the ferrous scrap generation in Europe and the USA has been under pressure. So there's some balance to the scrap market, but alternatives, imports is of course a challenge, and likely will continue for some time, well into next year. So that was the summary of the Raw Material Committee of yesterday. Thank you.
Thank you very much, Jens. Really, shall we continue with the traders?
Yep.
Thank you.
So Yeah, we had a lot of topics yesterday as well. One of those were also CBAM again, but after the very good and detailed report of Mr. Redshaw, we did not really go too much further into the details because we all, first of all, see that this will be impacting only in 26, and still, I think even Brussels is aware that what was announced so far will not be really happening in 26, so there are still discussions going on of how to implement it and how to tax it. So then, of course, the major point dominating the whole discussion was China again, as with Jens. So, yeah, and how you see the iron ore market trend, and the majority of the traders were of the opinion that iron ore will continue being under pressure, being in a range between $90 to $100 a ton. And the only obstacle people, and especially Hussein, had is that traditionally before Chinese New Year, the restocking is starting, and that could lead to a sudden increase of the prices and demand. So that definitely has to be considered. So we had another question from the audience, and that was the current spread between scrap price and rebar prices. Well, we still using the number between $200 and $210 for the Turkish mills. It was questioned whether with the inflation and the higher costs also in Turkey, this number is still existing or whether this is already too low, because I can say that in Germany, for example, we are confronted with prices and a gap of 250 euros a ton. And even this is not enough for the mills, then they pretend that they would need 300 to make a proper margin and to have also money left for reinvestments, especially under the green umbrella. So maybe Murat can tell us later what the production costs and the transformation costs from scrap to rebars might be.
It's a little over $210, that's for sure.
So yeah, then the question was how to compare and interpret 2023, 2024 crude steel production in China. And as usual, Hussein is able to give us very precise information. So in China, the average molten iron production was 2.3 million tons a day, which means a capacity utilization of 89% in 23, while it was only 2.2 million tons a day and coming to a capacity utilization of only 83%, which is 6% down. So the total iron ore stockpiles across China ports, according to the statistic, is currently 149,000 tons, which is a plus of 32% compared to last year's number.
149 million.
149 million tons.
Million.
Yeah. Which is up to 32% compared to last year's figure. And it was also said that due to the low rebar production in China because of the real estate issues and the continuous destocking, which was also part of the new implemented quality for reinforcing bars in China. So there was a huge pressure on prices for the old material to get rid of, which was really dumped into the market because from September 5 onwards, it had literally no value anymore because you were only allowed to use the new grade, where only a limited number of mills were at that stage able to do so. So that means the second tier mills really were under pressure with the prices, while the first tier mills, having TEMCO process and everything in place, they were getting much better demands and inquiries and could also lift the prices. So the total export of China, because China is the key factor in our business, according to the figures obtained, was in 22, 5.6 million tons average monthly, In 23, it was 7.7 million tons average monthly. And in 24, so far, it's 8.7 million tons monthly average sale. So, and for long products, in that case, you also see significant change. It's 638,000 tons average in 22, 907,000 tons monthly average in 23, and 1 million ton average in 24. So on billet exports, we also discussed the issue when Turkey was able to import in a very short moment of time almost 1 million tons of billets. We discussed it also in the board meeting before, and the prices at that time were around 460, 465 CFR. According to the latest information, the price went up to 490, 495, and obviously will remain at this level so far. So, China has been only exporting 15% of its total export as long product. As we all know, long products are getting more and more localized business. And so, the markets are getting more and more limited. So that were basically, beside the, what we had here. We also touched freight rates, which, and who is benefiting from the development lately. We all came to the conclusion that China has a bit of an advantage because the Houthis do not attack Chinese flag vessels, so they can go through the Suez Channel and have an advantage there to all other flags in that region. And who is suffering from that? Of course, the end users. Freight rates are getting higher, transport ways are getting longer, and the Egyptian government, of course, is losing a lot of money because of the Suez Channel surcharges. So, we went also briefly to the question, what do you want to be, blast furnace, electro arc furnace, for the next 6 months? And the answer was very clear. In the next 6 months, everybody wants to be a blast furnace producer because of the iron ore costs versus the scrap costs. But with the CBAM at the end of the tunnel in 26, this is certainly only a short-viewed impression, and that will certainly correct in 25. So, on the various markets, Europe is definitely depressed. Germany, the engine of Europe, is really having its problem. Real estate went down by almost 35%. Which is mainly based on higher costs and unattractiveness in investing, especially by international investment funds or real estate funds, because they have an extreme high cost versus a limited rent they can ask for. And so instead of 400,000 apartments, buildings we would need every year, in 23, only 200,000 had been built, and the outlook for 24 is even less than 200,000. And we have a huge lack of infrastructure, renewals everywhere. We have a lot of bridges which are closed for heavy trucks, which makes Germany, meanwhile, really unpleasant for logistics and for transit. And we all know that we have to do, and we have to invest a lot of money, which is starting now with the rail, but it takes time, and we are lacking workers, we are lacking everything, and also the applications are taking way too long for a quick recovery. So the outlook for 25 is as bad as it is for 24. It was for 24, and with the new government elected maybe by end of next year, Whether there will come any stimulus into the German market has to be seen. So that was more or less the
Thank you very much, Lee.
extract.
And finally, let's hear from the producer side.
Good morning once again. Thank you for coming to the conference once again. In the producers, I'll talk about the attendees. There were 137 representatives from 47 different producers and from 16 different countries. As it was in the case of Traders Committee and Raw Materials Committee, the main topic was again China, of course, as they are the main driving force of our sector today, and everything is dealt accordingly, unfortunately. Today, I'm not going to go through it because most of the things it has already been said in details from our colleagues. So we talked more or less the same thing. So I will cut it short. That part of what I will still tell you. But once again, China is the dominant force, and they've been shipping semis and finished products with a very low prices to almost everywhere in the world, putting pressure on the prices, of course, and creating a very huge supply and demand balance in the rest of the world. And of course, it's going tougher and tougher to compete. So besides that, when we talked about the GCC countries are more optimistic than the others a little bit. Their economy in general is going okay, in the right direction, as we can say. There are some projects, like in Saudi Arabia, like NEOM projects. It's a huge project, like we can say, building a new city that will push a little bit the demand in the market. They've been exporting, also GCC countries. We hear that they've been exporting to many different locations. Their construction and real estate, of course, is the driving sectors in that region. When it comes to EU, they are kind of struggling. Business in the EU seems to be in a standstill. This has been the case for more than a year, probably. And at the moment, at least in the next 6 months or so, we don't see any improvement. Demand is kind of slow. There are also exports to EU from Asia, GCC, North Africa, from Turkey. We can say, they buy from wherever it's available in a low price. When it comes to Turkey, Turkey has many problems, starting with the protectionist measures. We've been talking about this in so many meetings. As you know, U.S. is, we are dumped in U.S. heavily, starting with Section 232. On top of that, anti-dumping and CVD duties. So today, it's not possible for us to sell to U.S. Canada is another story. They have normal values. Actually, you don't even understand how do they come up with those numbers. There's really no explanation. In the U.S. case, more or less, you know how they calculate, how come up with those numbers. Everything is scheduled, everything is in line. But in Canada, the case, you really have no idea. So I really don't know where it's going to go, how it's going to end. It's a question mark. In Europe, as you all know, with the quota for Turkey, hopefully it will over in the first half of next year also, 26. That has to, so every other 3 months there's a little bit of action just before the start of the new quarter. For the new quarter will start in October, November, December. So in the this month, in September, there's a little bit of activity. Sales too. Other than that, it's slow. We cannot, of course, sell to Asia, like Singapore, Hong Kong used to be our top markets where we used to sell huge quantities. So now Israel is blocked. We cannot sell anything to Israel. So what is left? I don't know. you tell us. So there is really not many places to sell to. So that's the big question where we are heading at the moment. I don't know. So more or less, this was actually the near future doesn't look so bright. The next coming probably 6 months or so, we'll probably see the same trend or same activity. We are hoping that China will stop exporting. Yesterday, it was said only in September they exported more than 10 million tons. So they are expected to finish more than 110 million tons this year. So that's a huge quantity. And this really, again, even at the end, I come to China problem. It disturbs the whole activity in the whole world. So more or less, this was what was discussed in our meeting yesterday.
Thank you very much, Mr. Chairman. Yeah, as we discussed the other day, this year's total Chinese exports represent, like if we consider that as a country, it represents third biggest steel supplier in the world.
Yeah, I think.
After China themselves and Japan. Who was Japan and
like that.
Even bigger than US, right? So, difficult situation. Okay, thank you very much. Let me try to recap what I heard. Of course, as we have listened and as we all know, China is the dominant force in the market for some time now, with semi-finished and finished steel products exports and creating a huge supply pressure in the market, pressurizing prices downwards, and making it very tough to compete for other suppliers. I understand the Chinese economic activity is for sure below expectations nowadays, and there are not many hopes that there will be any recovery soon. Under these circumstances, we have also seen Chinese, at least the announced Chinese steel output coming down a little bit. They have reduced their iron ore purchases. I have noted that iron ore stockpiles in China is about 149 million tons, up already 32% compared to last year. And this is also, these factors are creating pressure on iron ore prices in the market. The prices have gone down from 120 to 100 and now to 2-year lows of $90 levels. Indian demand for scrap is also lowered under these circumstances. And even though there were better expectations for the second half of this year in terms of scrap market when we gathered in Berlin 6 months ago, those expectations have not been materialized. And the optimism has unfortunately been postponed until next year. European market situation is not good either. Another influx of Asian exports is expected. The economies are slowing down. We heard even in Germany, which is the driving factor, leading country in European economy. So recovery in Europe is also postponed, as far as I understand. Excuse me. Europe, the scrap generation in Europe has also been slowed down. In some cases, between 20 to 40%. Turkey has postponed scrap purchases, given the competitive alternative options imported, particularly semi-finished and particularly from China. Inventories around seem to be on the low side, and that is probably providing some sort of balance to the scrap market. But still, the import alternatives, semi-finished import alternatives, is a challenge for the scrap suppliers, and these imports are likely to continue well into the next year. So, yes, we have all been hearing about the Chinese exports. I have noted that the exports of steel products from China back in 2022 was at the rate of 5.6 million tons average per month, and it is this year the same monthly average of finished steel exports has reached to 8.4 million tons. And as we have recently heard, as we have just heard, in September, the figure was around 10 million tons. And long product exports has almost been doubled during these 2 years. Billet exports, as we discussed, is another issue. Turkey has already imported more than about 1 million tons, and it is likely to continue. On the freight side, I noted that China has an advantage because of the situation at the Red Sea, since their shipments have not been under risk. Yes, overall, the situation is not bright, even though the GCC market seems to be a little bit better than the others. European situation is still in a standstill mode, and Turkish mills are under serious difficulty, facing serious difficulty. They are facing serious difficulty because of protectionism, which still is a huge issue for them in terms of exports. They are not able to export to the US and Canada. The European Union quotas allow them to see a little bit of activity every 3 months. Israeli market is also closed, so they don't have many options to export their products. Thank you very much, Mr. Chairman. And I will continue with the questions that we have gathered. I will be directing these questions to the chairman of IREPAS committees. And if you have any questions, please stop me and let me know so that we can direct your questions to the chairman of the IREPAS committees. I will start with our first question. Of course, it is about China once again. This is for the panel, for all 3 gentlemen. China is playing a major role in depressing prices in the global longs and billet markets at the current time, making life very difficult for other suppliers worldwide. Will Chinese steel continue to flood the international markets and undercut most competitors for the foreseeable future? Do you foresee the measures by China's government aimed at supporting the Chinese economy becoming successful and thereby boosting domestic steel demand? You have already answered the first part of this question, so maybe we can discuss the second part. Who wants to start commenting?
Actually, we don't see any activity from the government to overcome these problems. As long as this is the case, China will still keep exporting. They have no other choice. Look, their exports are increasing year by year. So this year will be almost a record year. So unless the government does something, this case will always be there.
Thank you. Any other comments?
We discussed it at the raw material committee yesterday also, and it seems the last time this happened was 2014, 15, and 16. And after that, it turned into another situation. I mean, then it calmed down, but we will most probably see this continue more than through 2024, so probably also into next year, and even we don't know how long it will continue, but stimulus activity might give some relief, but probably not enough, is what the raw material committee discussed.
Yeah, what we've seen was that in the last crisis, the Chinese government forced mills to merger and to restructure the whole steel industry, which we haven't seen up to now after this real estate crisis. And so potentially, unless the Chinese government is doing something very quickly, we also do not really foresee a big change in the current situation and the export pressure of Chinese mills.
Would you agree with, I raised a similar question after Daniel Gross's presentation yesterday. He said that the government actually doesn't want to do anything. Would you agree with that?
Looks like.
But they will probably not wish to see the same situation as 10 years ago when there was a huge anti-dumping discussion and politics got very involved. So probably this time as well, but that might be something that the government fears.
Okay, so we may say probably take your seats, fasten your seatbelts, and brace for the impact. Okay, thank you very much. Next question. If Chinese steel exports continue to exert pressure on international markets, will a surge in protectionist measures globally be the answer? I would like to direct this question to the traders, really.
Yeah. Well, protectionism measures may always be a short-term relief and short-term help, but in the end of the day, it just changes the flow of products and is causing problems in other areas because this material will have to find another home. So there will be distortions on the market in any case, and and then the question is for all those who are doing these new tariffs or barriers, ultimately the prices will go up, the downstream industry will suffer. So it's a constant rolling on the wave, what is better for the country. We've seen in America when they came with a safeguard that on one side, the producers were happy, downstream industry was killed heavily. So whether this is always the answer, especially in Europe, I think we are going way too far in these measurements, and which should be more open because Germany is an exporting nation, and it was for many decades, and we are running in a way too much restricted and controlled market scenery.
Thank you. Any other comments? No. Moving on to the next question. This one is for producers. Back in July, China Iron and Steel Association stated that in 2024, China's apparent steel consumption will be around 900 million tons, and that is not expected to go above this level in the next few years. The Chinese government has suspended its steel capacity replacement program, aiming to limit production. Do you believe China will really reduce production this time? And if so, do you think that the global steel industry will feel the positive effects in the foreseeable future?
Besides reducing production, I think they will need to increase the demand. As we all know, they have a huge problem with real estate. It's chaotic. It's been going on for a few years now. No matter what they do, if they don't, even if they decrease the capacity, that should be enough to satisfy for the demand locally. Otherwise, they will always be exporting. And if they do so, again, the same story, the whole world will be under pressure. So the government has to do some stimulus programs to increase the demand, or it's just not enough to limit the production, to my idea.
Thank you very much. Any other comments? No. Okay. Moving on to the next one. This is for raw material suppliers. We have already discussed a lot on the iron ore pricing, but there is this question. How do you view the perspective of iron ore prices falling to $80 per metric ton CFR this year if more steel production cuts are implemented in China and if stocks remain high? Would this situation impact scrap prices?
Well, a dropping iron ore price is mostly based on lower production. So if China lowers production, it will be it will be possible, of course, that iron ore prices drop, and but slowing production could also be a positive for the general market. So to lower steel production in China could be helpful for the rest of the world, and but it of course risks the iron ore pricing. I read something from Goldman Sachs yesterday that we're expecting $85 a ton in the next quarter. But of course, it's very difficult to predict what prices, where prices are. But a lower production level in China could definitely lead to lower prices continued, which would be helpful.
Probably that's the reason why traders prefer blast furnace over arc furnace mills, right?
Right.
Okay. Thank you very much. Next question is for producers again. This year, Chinese suppliers have increased sales of semi-finished products and flat steel products to distant markets beyond the Asian region, like Turkey. What are the consequences for local producers in Turkey?
Well, of course, as it's been said, they've been exporting some semi-finished products and finished products, actually, both. Quite heavily at the moment. Just with these high scrap prices, now scrap being in 370s today, 375, 67, whatever, and iron ore being 91, 92 today. Of course, they have a cost advantage. On top of that, their mathematics doesn't fit with the reality of the world. They've been giving very low prices that I don't understand. This will, of course, makes that material from China more attractive today. How will it affect Turkish producers? That okay, they will not buy scrap, or they will buy less scrap. Whatever they needed, they will complete with billets, semis from China. They will be producing less billets, semi-materials. That might also put some pressure on scrap prices, as it has been for a while. Now it is changing, kind of. That's what will happen at the end, I think.
Thank you. Our calculations show about $40 per ton loss for Chinese suppliers on average.
Some claim. I don't understand the mathematics behind it. Maybe Doğan wants to say something.
Oh, sorry. Can we have the microphone?
They're being, although to produce from iron ore is much cheaper, but the way they sell doesn't justify that difference.
I kind of I kind of agree with Murat. Turkey is a net importer of scrap. So Turkey takes the scrap and makes product and sells to the world, and including domestic market. If the scrap price is this high, they're going to import billets and convert that to material and sell it to the market. So really, you can't expect Turkey to do anything different than that as long as the scrap prices are this high. So I hear a lot of comments as a negative. It isn't a negative. I mean, I'm sure that Europe and US can limit Turkish imports because of them using, Chinese billets, but they don't accept Turkish products today anyway. So what difference does it make? I think what Turkey is doing is very logical.
Thank you.
But still, there are some mills, as far as I heard in Turkey, that the Chinese imports of Chinese origin steel billets are creating problem for them in terms of their local sales of billets. So it's a kind of give and take situation. Thank you very much. Next question is for the traders. The EU's existing wire rod quota is mostly filled by Turkish low-carbon grade wire rod, sold at relatively aggressive prices. Do you think exports of Turkish value-added wire rod can gain ground in the next EU quota periods following the recent investments made in Turkey?
Well, There is likely to be an increase in value added. However, the sales and value is way more petty and fragmented, while for low carbon mesh grade, the people are buying in bulk. So we do not really foresee a major shift in the quota to value added.
Thank you very much. Moving on to the next one. This is for the Raw Material Suppliers Committee. Jens, in the light of Turkish mills' billet imports and the downward trend of billet import prices in the country, what do you foresee for future scrap purchases by Turkish steelmakers and the future trend of import scrap prices? Do you think Turkish mills will continue to purchase billet imports? We have already discussed a lot. Would you like to add anything on this one?
No, but I mean, we think that Turkey will continue, as Don was saying, to purchase billets, of course, and slabs and HRC, which will somehow lower the demand for their own steelmaking operations. It's inevitable, we expect, and how that affects prices should be relatively negative. Mm-hmm. But if the prices come down, I don't know. But of course, it's relative. It should be negative.
Thank you very much. Can we have the microphone? Comment or question? Comment. Second row, please.
Good morning, everyone. First of all, definitely not only Turkish mills, but also the other mills all around the world, especially in Europe. Everybody has rolling mills and also melt shops. I mean, to buy billets from China or Malaysia, Indonesia, yes, that would be a kind of temporary solution. But in any case, all the steel mills have to work with their melt shops. And there should be a kind of balance for scrap purchase and then billet purchase. I mean, that will be definitely affect negative way for scrap prices. But at the end of the day, what we are talking about green steel. We are talking about certain origin cargoes to be exported. Right now, Turkish mills are having some difficulties to sell their product to export market because of quotas limitations. But it doesn't have to be that way. Turkish mills have to keep going on research export market and to keep selling their product to export market. Therefore, one way or the other, I believe that Turkish mills are forced to buy steel billets from different sources. But at the same time, there should be a kind of balance to buy steel scrap. And iron ore prices and steel scrap prices, as we know, it's a kind of, let's say, parameters. Before it was like 3 times iron ore prices than scrap prices. It's different right now. But it's going to be big differences. I don't believe that it's going to be exact or definite relation between iron ore and scrap prices, because at the end of the day, since we are talking about green steel, the demand is going to be more and more for steel scrap for certain qualities, definitely. Therefore, at the end of the day, since we are talking about Turkish mills are forced to buy steel billets. Otherwise, they don't prefer. Why they stop their melt shop and rolling only the keep rolling mill? I mean, that's why they are in a kind of corner. And they are just looking for the best solution or the average solution for themselves. Otherwise, they are not going to buy any billets. Why they buy? I mean, they have melt shop, most of them, and they would like to keep going with steel scrap. I mean, that will be what I believe, that there will be a kind of balance, and Turkey still keep going on another 5 to 10 years leader position of steel scrap import worldwide. This is what I believe. Thank you.
Thank you very much. Of course, the situation is, well, as you said, they are under pressure because the gap in terms of dollars is huge. It's like close to $100 per ton, is it?
I think so.
Probably
so sure.
Somewhere close.
Somewhere.
So we'll see how things will develop. Thank you very much. Any other questions or any other comments from the floor, ladies and gentlemen? Thank you. So next question is for producers. How do you assess the current state of the Turkish steel industry, in particular of Turkey's long steel and billet segment? Where does the Turkish steel industry go from here? Which export markets should it target? You have already said that there are no.
This is not something new. This has been going on for the last couple of years. If you want, I'll repeat it again.
Please.
Well, I'm not going to go over of course, protectionism is on the top, but I'm not going to go over that. I just talked about it in the previous question. But on top of that, there are really, competition is getting tougher and tougher. I think it was in the previous conference, there was a question like this also. The countries where we used to export, now they became exporters themselves, like in GCC countries, Egypt, Algeria. We used to export heavily to these countries. Now they are exporting, and they are exporting to what is left of our market. So really, when you look from Turkish perspective, the markets where we can do business is very limited. So tough times, we are, I said again, but there's no problem of saying it. Top market is Yemen for Turks today. I mean, so now Israel is also out of the picture. Europe is out. It's going to be out for the next 2-3 months. Again, US, Canada is not there. A little bit of South America and some countries in the region. This is what is left of exports. So it's limited. I mean, I don't see any strategy. What can you do? There is no strategy you can develop. And most of the solutions we cannot control. It's not in our control. So we are stuck.
Yes. It seems Turkish mills are pushed into the corner somehow.
That's what it is at the moment.
Thank you very much. This question is for the panel, gentlemen. Asian steel giants had plans to build new capacities in the GCC amid the expected increase in local demand there. However, for now, there's a lack of projects being approved. How do you view the situation regarding new steel capacity expansions in the UAE, Saudi Arabia, and other countries in the region?
On the long run, that is tough, but of course, people see the opportunity, growing opportunities in that region, and probably they want to be the first to be there and to develop the business. They don't want to miss the opportunity. Okay, there were projects, some of it postponed, but there will be there. So I believe GCC countries will keep going, developing, the region, like this new NEOM project in Saudi Arabia. And there were another huge airport project in GCC. It's going on. So I think they see the opportunity and they want to be there to take part in that. So they need to invest in new quantities or whatever. So that's what I think about it.
Thank you very much. Any other comments?
Well, actually, we try to find out what investment those are, and all what we found out so far is that the investments are entirely on flat road. So I haven't heard any one of my colleagues being aware about a long product investment in that region. So, but if anyone knows which project that is, I haven't heard of it.
Not many. Anybody from the floor who wants to contribute, or can we have the microphone, please? Second floor, second row, please.
This morning I found myself very talkative. First of all, I agree with Mr. Murat. The Gulf countries were export markets for Turkish mills in the past. Now they are having new project already, and they became kind of competitors for all the export markets, not only from the finished product side, but also for steel scrap side. I mean, most of the companies in Gulf region are working based off DRI, HBI, because of their natural gas and the petrol. But at the same time, they are also buying time to time steel scrap from Europe, from America. Okay, they follow Turkey, they follow Turkish mills movement, and then when they see the opportunities, they come also to buy some steel scrap to buy and just to keep going on. But the point that in long run, one way or the other, these guys are going to be exporters, because in this certain project, after they complete, and all these mills will not be disappeared from their side, and then they will be just keep going on. And just I would like to add where we can export as Turkish side. I think it's going to be like new other planets, Mars or something like that. I mean, otherwise, really, Turkish mills are surrounded with the big walls and big limitations, big quotas. And yesterday, Mr. Luciano also mentioned that overcapacities of worldwide steel mills, and we are having these kind of problems also in Turkey. And theoretically, Turkish mills capacity around like 60 million ton, but we are talking about 30, 35 million ton production, which is really loss for Turkey, which is really loss for all around the world, because this problem is not only in Turkey, also in the other side, in the other countries. Thank you.
Thank you very much.
He wants to say something.
Rami, please.
And just to add, I think, like what you were saying, basically these are going for the flat. Egypt also is having something going on in the Suez Canal economic zone, and they just announced the contractor for the new plant, but it will be mostly for the flat. I think they are going to use it also, in my opinion, not only for the domestic sales, but basically for exports. Because this, in our case in Egypt, for example, this Suez Canal is a free zone. So I think they are repeating what they were doing in the Far East. They are more or less repeating what, the gentleman yesterday was speaking about, the Asian area wherein they are adding plants in Indonesia, Malaysia, blah, blah, blah. So I think that might be a way to go. So there is a proximity in the freight, and also they might skipping some of the anti-dumping, etc. So, but at least for us as long producers, for the time being, the good part is that most of the investments, as far as I heard also, is going for the flat. Thank you.
Thank you very much. Moving on to the next one. This one is for traders, really. How would you evaluate the performance of the Russians in the billet export markets given the various sanctions they face when selling abroad? What are their main export outlets? How important is it for them to have these export outlets in addition to their domestic market? Apart from the Chinese, are the Russians also playing a significant role in keeping down international billet prices?
Well, we cannot really comment on the Russian performance, and I really wonder if anyone here in the room can. And all the news which are coming from Russia, I think, have to be taken with a lot of caution. So what are their main export outlets? Yeah, it's certainly Turkey, Egypt, Tunisia, Taiwan, Middle East, Philippines, and all these areas which have not put barriers due to the invasion in Ukraine. So, and to answer the last question on China, yes, they are playing a big role in keeping the prices on billets low, that's for sure.
Thank you very much. Next one is for the Raw Material Suppliers Committee. Do you see the possibility of an increase in the volumes of cheaper pig iron offered from Russia to Turkey and an actual improvement in demand for this raw material in Turkey amid the exhaustion of Russia's quota in Europe?
We heard a lot of caution also when it comes to imports of Russian material into Turkey, for the reason that when Turkey wishes to export material, especially like to Europe and things like this, it's important to not have Russian inclusion in the production. So, but of course, to be able to make ends meet, it's likely that producers for domestic market might continue to import Russian material, of course.
Would you like to comment on the European market, since the pig iron quota I mean, Russian origin pig iron quota has been exhausted.
So it's exhausted for this year now.
Yeah.
Next year, and this year I think it was 6 million tons pig iron imports into Europe. Next year it will be slightly lower and to become exhausted in September 2026. And a lot of members at these sessions here expect that will be quite difficult to be able to handle. But they've been given time by the EU, especially Italian market, to be able to handle to be able to get alternatives to Russian material.
Thank you very much. Any questions from the floor? No. Next one is for producers, Mr. Chairman. As ASEAN suppliers compete with China, how do you see the export price trend from the ASEAN region developing?
They will need to compete with China, of course. They have already been exporting quite well. They even exporting to US from Vietnam. There are also exports from Indonesia, Malaysia, and they are quite competitive. For them also to survive, they need to sell, and just because of that, they need to compete with China. That's mainly the reason.
They are under...
they're under pressure also.
Huge pressure, right?
Yeah, China is is the big elephant on top, and everyone down there is...
Can we have the microphone, front row, please, Mr. Baysal? Thank you.
I think most of the Asian mills and Southeast Asian mills are owned by Chinese. So they're really not competing. There's substituting whatever they cannot export directly from China with theirs. I noticed that especially Vietnam, majority of owners are really from China.
Yeah, you are right. And also yesterday, the gentleman was saying there are new investment in Asian countries by China.
Mostly Chinese.
So mostly Chinese guys, and you are absolutely right. Thanks for bringing it up. Thank you.
Thank you very much. Next question is for the raw material suppliers. How do you assess the prospects of the logistics market for the transportation of raw materials?
So, especially the continuation of containerized traffic going around Africa. So the logistics routes are taking longer time. So the total period of a business takes long time when the containerized traffic is not going through the Suez Canal. So that's the main effect of the Houthi rebel attacks in the Red Sea. That we still see that going on. So things have not been turned back to normal as previously then. And that's the main effect we see.
Thank you very much. Last 5 questions I have here. This one is for traders. Will we see protectionism increasing or otherwise in the coming year? Where do you foresee it having a major impact on trade flows?
Unfortunately, I must say yes, we foresee that. And if you see that Canada announced early this year investigations on rebars from Bulgaria, United Arab Emirates and Thailand. Mexico has duties on various products. The EU is implementing the CBAM, which we as traders also see as a major trade restriction. Turkey, for example, just prohibiting sales to Israel, amongst others. And also just last week, the US announced huge anti-dumping investigations against coated material, even from Netherlands with 15%, and Vietnam with 156%. I mean, these are numbers which are out of sight and out of line, where you really kill everything. And the question is, what is the intention behind? And I think these trade cases are being more and more used either to keep the people in your country happy, to show that you have done something, or I don't know, but it
May I add something? And I think recently Australia opened up an anti-dumping case to Turkey. So I think everybody is trying to keep what is theirs, their little place. The competition is so tough. China is.
Oh, that's why we say as traders, the market is getting more and more regionalized,
Exactly.
and the globalization, which we all had in our spirit for years and decades, is really being taken away from many governments, and it looks like it's a fashion of the year to do that and just to follow that trend. But well, we all know, being in that business, that open markets actually is more helpful for the ultimate end user and for the consumer rather than all these trade barriers.
Difficult times for the traders to calculate all these duties, safeguard measures, etc., into their plans.
Yeah.
Thank you very much. Next question is for producers. How do you view the current situation as regards the option of billet versus scrap for electric arc furnaces, and how would you compare electric arc furnaces and blast furnaces at present in terms of production costs? How do you foresee this picture developing in the next 6 months? Traders have announced their view. Would you agree?
Yes, I totally agree. If you look at the price difference and what's happening from China exports, that explains this. And of course, come CBAM measures in 2026, it will be a totally different probably picture. But until then, I think if the prices stay the same, I think, whatever he said, Mr. Alf earlier, that's what it is. I agree totally.
Yeah.
To have the blast furnaces much more effective today.
Okay.
Price-wise, the cost effective.
This confirms also the previous discussions. We will see a lot of billet imports since arc furnace costs are not comparable to blast furnace costs.
Yeah. But it's going to be limited, as it's been said. You cannot, of course, have this balance.
Sure. Thank you very much. Last 3 questions. This is the final one for the Raw Material Suppliers Committee. What is the current situation in the financing or trading of scrap and or other raw materials?
So with the higher interest rates, higher rates in general, lending rates, financing has become much tougher, and also as the steel industry has been suffering for the last 2 years from poor results and business, the credit insurance has become limited in a state where it's expected that demand might rise in the coming few years. The operations are, performing poorly. Mm-hmm. So there's a current situation where the credit insurance systems are reducing. So it's a challenging situation for raw material suppliers to be able to get cover for their sales. And that's continuing, likely for some time.
Thank you. Can we have the microphone for Mr. Baysal once again? Thank you.
The financing is really tough nowadays, but it has everything related to the interest rates, and interest rates is related to the inflation in the countries. And during the COVID years, the U.S., Europe, Japan all printed trillions of dollars into the market. Now they're trying to control the inflation, and the interest rate went up. When the interest went up, you see this, both Europe and U.S. and actually the rest of the countries are being squeezed because with these high interest rates, the private investment do not want to invest because these are very expensive to invest these things. Only the countries like U.S. can print money and do some infrastructure projects. The rest of the world doesn't. Like a country like Turkey cannot do the same level of investments or infrastructure projects because it costs so much money.
Right.
So unless that situation changes, I think we're all going to be squeezed from both sides. It's a catch-22, unfortunately.
Yep. Thank you very much. Any other question, comments? There's a question, I believe. Question or comment, I don't know. Microphone is coming. Yes. Thank you.
Yeah, good morning all. Mr. Jain, you mentioned that scrap market is stable and generation is less in EUs. What are the reasons or impacted parameters that generation has been reduced?
The parameter of what?
Scrap generation has been reduced.
It's because of poor economic activity in the European and the North American sectors. So when the wheels are not turning as fast, so the growth in Europe is negative more or less. Okay. Especially in Germany, we're in Northern Europe, we're experiencing more or less a recession if we're talking about Europe. And in that climate, we see lower scrap generation because activity is just lower. You keep your car longer, you wait to go to throw things away, and the industry is not performing as good as it was before. So therefore, you see less scrap generated.
Got it.
That's the reason.
Thank you. Last two questions. This one is for traders. This year, global steel production is expected to increase by slightly over 1%, and robust demand from India is expected to support steel consumption. Are there any other reasons for optimism in this mostly gloomy picture?
Honestly, we don't expect India to be an importer of long products in the midterm or even in 2025. Not even for semis, because you have to consider that you need the Indian homologation for those long products, which is not really easy to get. And we all know that India is also extremely quick with anti-dumpings if they foresee that they become a target of imports to the detriment of the domestic industry. So I think everyone who has some hope to participate in that gloomy market will be a very short-sighted.
Maybe I should not ask this final question, but since I have it already here, let me read. This is for the panel. The essential problem facing the global longs and raw material markets seems to be the sluggishness of demand worldwide amid the bearishness of global industrial and economic outlooks internationally, added to which there is also the issue of overcapacity on the supply side. How do you foresee this situation developing in the coming 6 months or 1 year? Anybody with slightest optimism, please.
Well, there's added capacity, and so the capacity utilization rates will most probably be continued to be depressed or even lower because there's more capacity being added in many different countries, and they are performing at lower levels, so it will continue to look very gloomy.
Yeah, and well, we all see the overcapacities, which we have discussed in length. We are seeing that the markets are all having problems with economical increase, so the productivity is going down almost everywhere. And with new capacities coming up and are built up wherever, yeah, it will be a high pressure on the prices, a high pressure on the sales, and yeah, then you have to expect new measurements to be taken by those countries where the new investment has just been made, and that the governments will try to protect the workers, and always the same arguments to forbid others to enter that area, and so we will get into a more and more protected and varied environment.
Thank you.
Well, overcapacity issue, I think, still will be there in the next year or so, as really the markets are small to exports. to satisfy the local production of local exports. And local demand in many countries are very low as the economies are not doing well. As just said, especially in Northern Europe and Europe itself, it's in the standstill kind of. So people will have hard time to sell whatever they are producing, so they will reduce probably the production, and the overcapacity on the supply side will still be a big issue.
Thank you very much for honest comments, straightforward answers. At the least, we all know that our industry is cyclical, and hopefully we are close to the bottom or at the bottom of this cycle. So soon we should be heading upwards. Any other questions or comments from the floor? Can we have the microphone, please? Thank you. Please.
Yeah, and it works? Oh, okay. Andrei Zhelyazov from Mitinvest, and the question is not about, let's say, Turkish market, about US. Soon we will have elections in US, yeah. And here I have two questions and your thoughts. The first one regarding the steel market in US, what do you expect in terms of local market demand and prices for steel and for scrap? Should we expect some rebound? And the second question is regarding some potential new trade barriers, some new safeguards. So what should we expect in one and another potential winner on the elections? I mean, like with China, it was with Trump. So what do you think? Thanks.
Thank you. Any comments, gentlemen? I'm sure Mr. Baysal will
Mr.
have some comments.
Baysal will have a better answer to all these questions than us. But it's also very much depends who is going to win the elections. It's a political side of the business that I don't want to go into, and I'm not so qualified to do so. But I think locally they are good. As far as I'm talking to the traders and buyers in the States, their quantities dropped significantly compared, their imports dropped significantly as it was compared to what it was before. Local production increased a little bit. They have mini mills opened up, like Nucor has a few mini mills here and there. So they are, of course, affecting the exports or imports to US. And at the end, we will not have the same quantities as we did earlier, a few years back. And the Turks used to ship huge quantities. I know from our company, we used to ship a minimum one vessel to US, which we will never see again, I think. I think Mr.
It's expected that the US will add a lot of production in the coming few years. So I think that you will see protectionist activity despite who wins the election.
I mean, we have heard already that Mr. Trump said that once he will be elected, he will put 10% additional duty on all imports on steel products. And we also discussed it already that, for example, Nippon Steel and their approach to U.S. Steel to apply them for over $14 billion was kind of rejected by the Biden administration. They rather go for half the price, but to keep it a local mill because they do not want to be independent from foreigners, which is a bit strange. Seeing Japanese investors with a mill in the U.S., which you cannot just carry on in your bag and go away. So, but yeah, I think this is a lot of psychological. This is to have your voters seeing you as protecting their area, the workers and so on. So, political.
Probably. Yes, Mr. Baysal, please.
Let me add this to the discussion. I think what happened is for the last 6 years, due to Section 232, U.S. created the safe haven for the domestic mills to really pocket billions of dollars that the taxpayers had to pay. And with this much money that they have really gathered, only some of it went back to the reinvestment and building new mills. So what we're seeing today is they added a huge amount of capacity to their production. And the easiest one was, of course, rebar. That's why there's a very high investment on rebar investments. I mean, flat products was the secondary because their capital spending is higher. But what you're seeing now is the U.S. is importing less, and of course is becoming more protective because really they have a lot of production and they want to make sure that their production is secure and safe. So it's not a foreseeable. I mean, I think that it's not sustainable. Eventually, some of these mills will figure out that they can't compete with the rest of the world. So when the situation changes on the tax situation or the duty situation, you will see that some of the mills in the U.S. will have to get out of business. Like probably if U.S. steel is not sold, they're going to go out of business.
Thank you.
Interesting. Thank you very much. Any other questions or comments from the floor? Rami, please.
Maybe one general comment, to close on a positive note. What I see positive nowadays is that everyone is realizing, the amount of challenges, because I've been attending the IREPAS for some years, and sometimes, there was, in sometimes, a state of denial. But now it's very clear, and even I think so for the Chinese also, even if they are at a very low price level compared with the rest of the globe, but still we see them also following, some trends. So one day we see them, they are opening on an increase. Other day we are seeing them, they are opening on a decrease. So I think we are somehow close to the bottom. And I think also no one is intending to make losses. We agree or disagree with, Chinese directions in the markets, whatever. But I think somehow, I hope also we are close to the top. And even if 2014 might be another 2015, but I think also we are having more agility, we are having more experience, we are having more resilience. So I hope we will pass through it. And I think we are close to pass through it. So let's hope for something better. Thank you.
Thank you very much. Maybe we should stop it here.
Yeah, with this positive.
No more questions.
Thank you, Rami. So if you don't have any other comments or questions, I'd like to thank you very much, gentlemen, for your comments, for all your straightforward and honest answers, and for your attendance, for your contributions. Really appreciated your contributions this morning and your attendance. And of course, thank you very much for your attendance to the event for these 3 days. I also would like to thank our distinguished speakers who have shared their expertise and opinion with us yesterday as well. And last but not the least, I would like to thank our sponsors, starting with İçtaş, Ekinciler Iron and Steel, Alex Stewart International, Belgian Scrap Terminal, Kocer Steel, QSS Global, DFC Demir Çelik, Esna Logistics, Link Inspection, Manav International, and TPI Group companies. So, once again, thank you very much, ladies and gentlemen, and I really hope to be able to see you in Athens in 6 months' time. Thank you, and have a nice trip back home.